Here to help us make sense of all of it, we've got Grow Investment Group Chief Economist Hao Hong. Hao, it's good to have you. As an economist, who has the economic upper hand in the U.S.-China relationship right now? Because the U.S. economy has been much better than expected. China's has been worse, although still growing faster. So who do you give it to?
Thanks for having me. I think it's a very tricky question to answer, to be honest. I think the U.S. is doing very well. The U.S. stock market has been going up, and I think the Chinese stock market has been narrowing until recently, right? So it's trying to find the bottom and trying to consolidate. So I think if you look at the past 3 years since the pandemic, the interest rate gap between China and the U.S. actually determined how the Chinese asset price has been performing so far in the past 3 years. So, I would say that, right now, China would love to have the leeway of the U.S. Fed, pausing or even eased the monetary policy to stimulate its economy. So, so I would say that right now, China needs, the Chinese economy needs all the help it can have right now.
Do you expect the Chinese leadership to put in that stimulus, to inject it into the economy in a way that will really help the economy meet the growth targets that it's setting out? Because we've seen stimulus, but it's been sort of incremental, and there's not much evidence of a full-blown recovery.
Yes, that is true. Well, so far the stimulus has been, easing monetary policy. In a year where the economy needs all the help it needs, the fiscal deficit is actually less than last year, right? So therefore, the monetary easing is not doing all the work it can show on the economy. So I would say that right now, because the easing and also all the stimulus has been focusing on the property sector that has, still not responding so far. And also the infrastructure spending is not stimulating consumption, because infrastructure takes a couple of years to mature. So I think as a result, the Chinese consumption is still weakish. And also, the Chinese economy, even though it's set out to achieve the 5% growth target, it's set out for earlier this year, it is still not, as strong as it should be, especially given the historical experiences that we had, after the rollout of the stimulus. So, I would say that, going into 2024, we will probably see more physical stimulus coming this way, and probably a bigger physical deficit, to help the Chinese economy to recuperate in the next year.
Hey, Hao, the president was asked yesterday about his hopes for this meeting, and he said one is just to get back to a normal course of communication, being able to pick up the phone and speak to each other in the event of a crisis. I wonder, do you think that's a reasonable expectation for this round? And if it is, what does that mean for some of our longer-term worries about things like Taiwan?
Yeah, I think the dialogue has been reassuming, after a long pause. So recently, you've seen, the bilateral exchange has been intensifying between the two sides, right? So, we have Yellen, and also we have the leader of the Republican parties visiting China. And also, before this summit, we're actually seeing many of the details has actually been discussed and probably has been agreed on before the summit. And therefore, it would make the visit more fruitful, more worthwhile for the Chinese leader to attend. So, I would say that, going forward, it's probably the dialogue will be continuing. And also, because it's been a long time since the two leaders last met, this is a very strong initial first step. And I think if you look at the market reaction, it has a very positive tone, of reception of this summit.